All right, so let's dive right into this. There's a good amount of material to cover, so I want to start right away. Tonight, like I said, we're going to talk about demystifying short-term tops and bottoms. So before we get into that, just talk a bit about who the audience for this chat should be. This is going to assume that you have an understanding already of technical analysis and that you're actively trading, particularly in the US equities market. These theories and ideas will hold true in other markets as long as you are looking at the same types of charts. But I have experience in the US market, so that's where my expertise is in identifying these patterns. So you should be familiar with how to sell, the different order types, how to find your own trading ideas. And these ideas are primarily going to be useful for shorter term traders, so day traders and swing traders, although they can easily be translated to larger time frames as well. So you can use the same types of ideas on larger time frames. It's just that things are going to happen more slowly. So the important thing to remember here is that this is all about risk management. So if you are unfamiliar with trading, if you have not been actively trading for at least some amount of time, then just keep in mind that these strategies are pretty risky. So you're going to want to be careful with them. Things can get out of hand really quickly. So it's important to always have a plan. Understand that if you don't, you can theoretically lose more than your initial investment if you're short selling. So it's a high risk, high reward strategy. Just be smart with it. So that's all I'm going to say about that. I'll start with just a little bit of background. Stocks typically tend to ebb and flow, right? They don't just go straight up or straight down. So usually, right, there's a pattern of higher highs and higher lows in an uptrend, or lower highs and lower lows in a downtrend, right? So you see the stocks go up and down as they overall move upwards over the long term. But this pattern is predictable. And when a stock goes straight up or straight down, the chart becomes parabolic. And what that means is it's literally shaped like a parabola. So if you don't know what a parabola looks like, just Google it. It's very easy to spot. High school math. So the chart becomes parabolic. It starts to look like a parabola. And we'll look at some examples of that later on. So this behavior, the reason that the chart gets this way and the reason that the stocks behave this way is that there's extreme overreactions by large numbers of people. So this happens in times of panic. It happens in times of really good news for very volatile companies. And the primary emotion in play here is usually fear. And it's either fear of missing out, or FOMO, or fear of further loss, right? Trying to stop your losses, you're panicking out. So all that emotion shows through in the chart. So what we're looking for when we're trying to identify short-term tops and bottoms is the reversal of this emotional overreaction, because usually when things go up really quickly, they come back down really quickly, and vice versa. When they drop really quickly, they bounce back up really quickly, which is good for making short-term fast profits. So what's the goal? Well, we want to identify stocks that have gone up or down too far too quickly. So we're looking for things that have gone parabolic. And when we find something that's gone parabolic or is going parabolic, no matter what time frame you're looking at, whether you are looking at a daily chart, a 5-minute chart, a 1-minute chart, or 30-minute, or whatever kind of chart you're looking at, the goal is to take a small position in the stock against the short-term move and understand that your first entry is usually going to be wrong. That's why you start small. So if you guys have traded before, you most likely know that nobody can hit the exact top or bottom perfectly every single time. You're going to be wrong. So your goal is to build a little profit cushion at a reasonable average price by averaging up and averaging down, meaning you start, if you're short selling, for example, you start by short selling, say, 100 shares. And then when it starts to slow down, you add another 100 shares. And when it starts to work for you, you add 200 shares, right? And so you build up your position piece by piece in order to make sure that if you're wrong, you're not going to get wiped out right away. So it doesn't depend on, timing it perfectly on the first shot. So the ultimate goal obviously is to make money, right? So we want to try to profit from the violent retrace of the stock in the opposite direction, and then potentially once the euphoria or the panic wears off, build a larger, lower risk position for a longer term move, right? Once you know the top is in or the bottom is in, then it's okay to start building a larger position. Now let's talk a little bit about the risks. We know the goals, let's talk about the risks because this is one of the most important parts. Number one risk is you're just wrong. The stock doesn't reverse at all. Or number two, the stock starts to reverse, and this is almost more dangerous in my opinion. The stock starts to reverse, but then resumes its previous parabolic behavior. And that's really dangerous because it can convince you to start adding to your position like you're adding to a winner, but then when it reverses and continues going parabolic, then you end up losing even faster because you have a bigger position. Number three, the stock completely stalls and just gets stuck in a range that gives you really no opportunity for profit. So I've been in some trades in the past where the stock is going parabolic and all of a sudden it just kind of stalls out after I enter in, and maybe my first entry was wrong, and so I've got like a little bit of a loss, but then it's not going up or down. So I'm not really losing more, so it doesn't make sense to take it off for a loss, but it's also not allowing me to add to the position in order to make the loss back and turn it into a gain. So that is another one of the risks. Risks number 4 and 5 and 6 actually are all kind of interrelated, and they involve when you start averaging into the trade, right? So starting too big, right? Buying too many shares on a panic, buying too many shares to start, or on a euphoric move to the upside, short selling too many. And there's also a risk of starting too small, right? Because if you start too small, then the reward doesn't really outweigh the risk. And over the long term, you start to see a poor reward to risk ratio on your trades. So these are the risks. You have to understand that this is a risky strategy, and it takes a lot of skill to find the top or find the bottom, and to do it in a way that doesn't cost you too much money on the way there. So there's a few different types of parabolics, and this is a screenshot of a trade from a long time ago. This was probably, from this chart, this was probably like 2015 or so. But this is what a parabolic chart looks like. And we'll look at some more modern examples towards the end once we get done with this presentation. But this is what a parabolic chart looks like. You can see that it starts to accelerate and accelerate. And then at the end, there's this big blow off to the upside. And then it kind of snaps back real quickly and starts to drift down. And this is what you'll find on most types of parabolics. So there's 3 primary types: acceleration, deceleration, and grinding or stalling out. And then there is another concept of front side versus the back side of the move, which we'll talk about after we look at examples of the 3 different types of parabolic trades. There's also different time frames that they can occur on. So when you're looking at, for example, an intraday chart, like a 5-minute chart, such as the one that is on the screen right now, that is one place that a parabolic move can happen. But you may also see them on daily charts and MTFA, which stands for multiple time frame alignment. So you might see it both on the daily chart and the intraday chart, which is actually an even more powerful signal, right? Because the stock is parabolic both in the longer term as well as in the short term. So we'll talk about the different places that they can show up. And then we'll also just touch briefly on gap ups and gap downs and big rapid spikes all in one candle, and why those are not usually good for parabolic trades. The first type that I mentioned is acceleration. And in an accelerating parabolic move, this is the type of pattern that you will see. Whether it's up or down, you'll see the candlesticks expanding in size, almost like an exponential curve. And these types of moves typically accelerate to the upside, and then they have a quick snapback and they start to slow down as they fade off. And then same thing on the downside, right? They accelerate to the downside into a panic, and then they will bounce slowly and start to weaken. And we're actually seeing this right now on the S&P 500, which is actually really cool because there's a perfect like modern example of it right now. If we look at the SPY daily, we had this huge sell-off in February and March, and it kind of culminated in this big flush at the bottom. And now we're seeing that exact pattern where the stock just kind of loses steam, or in this case it's an ETF, but the pattern kind of loses steam as it bounces. So this is the exact pattern we're looking at right here, this deceleration or acceleration down and deceleration up. We're seeing this in real time in the S&P 500, which is pretty cool. So that's the first type. The second type is sort of the opposite. It starts off with a big spike upwards, and then it will decelerate, indicating that the move is losing momentum. And the key thing to remember here is that it starts off with a lot of emotion, and then it ends with that emotion sort of drying up, right? Whether it's a panic initially, and then the panic starts to fade away, or if it's euphoria initially, and then the euphoria starts to fade away. You'll often see once that move dries up, once that emotion goes away, the stock will accelerate in the opposite direction because you have really low risk entries at these points, right? So at the top of a move that is decelerating to the upside, it's really easy to short sell a stock right at the very top and just put your stop loss a few pennies above where the last candle was, because you have really small candles at the top. And if you're not familiar with short selling, it might be easier to understand a stock that panics to the downside, where you have this initial big dump, and then as the emotion starts to fade away, the candles get smaller and smaller and smaller, and it becomes lower and lower risk because you can buy it pretty low and you can set your stop loss really close. You don't have to worry about it having, a big giant dump to the downside because the emotion is starting to go away. So these are some of the easier ones to trade. The acceleration ones are really, really risky because you never really know where that blow off is going to happen at the top or the bottom. And you're kind of, if you're short selling a move upwards, you're pretty much picking it up. It's a car horn going off in the background. You're pretty much short selling it like into the point where everybody is panicking to the upside, and vice versa. When you're doing it on a falling stock, you're trying to catch that knife at the worst possible time when everybody else is panicking and selling, and you're trying to predict the bottom. So that's really difficult, but it's a little bit easier to predict it when you have a decelerating move. So acceleration versus deceleration. If you are going to try this, I would recommend that you look for stocks, at least if you're a beginner, that are decelerating to the upside, or to the upside or the downside. It doesn't really matter, right? But just look for that deceleration as opposed to ones that are panicking upwards or downwards. These are a little bit easier to time the top and time the bottom, and they're also much less risky because if you're wrong, you're just going to lose a few pennies. All right, and the third one is what I call a grind and stall. And this is where you'll see the stock pretty much have the same size move. It's difficult to tell what the emotion is. It's just grinding higher and higher and higher. And then you'll see a stall at the top where it just kind of stops going up. And you'll see the same thing on the downside where you have this sort of uniform sell-off. And then all of a sudden you end up with a few candles to the side, and people start to take on lower, those low risk entries because they just put their stop loss underneath the low, or if they're short selling, they put their stop loss just over the high. So three types of parabolic moves. You'll see acceleration up and down. You'll see deceleration up and down. and you'll see this grind and stall up and down. In my opinion, the easiest one to trade is probably the deceleration up and down. The most profitable and also highest risk is definitely the acceleration moves up or down. And then the grind and stall up or down is a bit less predictable, and I don't see as many of these. So those are the three types of parabolic moves. Now let's talk, I mentioned the front side versus the back side, and this is actually really important regardless of whether you're looking at a parabolic trade or not. What I call the front side of the move is before you have a confirmed lower high. And the reason that this is called the front side is because until you have that confirmed lower high, you really have no indication at all that the move is over. There's no indication before you get that lower high that the stock is not going to just keep going up and take out the previous high and just continue its uptrend or continue going parabolic. So when I am looking for parabolic moves to time these reversals, one of the things that I look for if I'm short selling is a lower high after I see what appears to be a peak. If it takes out the previous high, then I'm just going to wait until I see another one. And this is where you'll see sort of some of the more traditional technical analysis patterns like head and shoulders and double tops and double bottoms and things like that. But the key point here is you want to look for confirmation where there is, a lower high, because that gives you a defined place to put your stop loss if you're wrong, right? Once you see that lower high get put in, then you enter your trade and you put your stop loss above the previous high, and that's it, right? So you have that entire downside move to make money and just a very small risk back to the previous high, where if it goes back above the previous high, you just take the trade off for a loss and you move on. And this is the same thing that you'll see on downward moves, where you have a acceleration or deceleration to the downside, and then you'll see an initial bounce and then a pullback and then a higher low. And that is where you're going to try to time your entry, because at that higher low, that is where you have the lowest risk, because you can just put your stop loss right underneath the previous low and you have the entire backside of the move to potentially make profit. So front side versus backside, whether you're talking about parabolic trades or just any kind of reversal, looking for those higher lows and lower highs, depending on whether the stock is going up or down, is a really good way to identify low risk opportunities and potential reversal points. All right, now I mentioned that there are two other types of what might be considered by beginners to be parabolic moves, and they are spikes and gap ups and gap downs. This is not typically, in my opinion and in my experience, this doesn't really, it doesn't behave the same way as a parabolic trade, because things happen so quickly. There's just no way for people to react in a rational manner. So when I see a spike like this, just because it dropped, right? In this case, this is an Apple earnings announcement. It dropped about 5 or 6% in like one candle. So this is a huge move to the downside, to see Apple shed 5 or 6% in less than 5 minutes. That's a huge move to the downside, but it's not parabolic, and you don't really have a low risk entry. So usually what I look for when I see these spike up or spike down moves, especially on earnings announcements and, like market moving news, like FOMC minutes and things like that, what I look for is for these to develop into one of the earlier mentioned parabolic patterns. So this spike downwards on Apple would be a perfect opportunity for it to create this deceleration down pattern, where you have that huge initial first candle, and then the second one is a little bit smaller, and the third one is a little smaller than that, until you finally see it start to bottom out, and then you can put on your trade at that low and put your stop loss right underneath where you enter. So you have a lower risk opportunity there, looking for those candles to sort of shrink. And that's why I don't just immediately jump into something like this just because it went down. Similarly, a gap up or a gap down, you can see here, even though the stock gapped from $2 to $9, right? This thing was up over 400% overnight, but it still continued higher because there was no opportunity for anybody to get out. And the other thing that you'll see in some of these trades that gap up a lot like this is people immediately jump on them and think this thing's up 500%, it has to go back down, and they end up short selling and getting trapped, which means they have to cover by buying those shares back in order to get out of the trade, and that causes a short squeeze. Like you see here, the stock gapped from $2 the night before to $9 the next day, and then over the following month it doubled again from 9 to almost 18. And if I remember correctly, this stock ended up getting bought out for like $38 a share or something like that. So once that gap happened, there was no opportunity for anybody to get out. This is not a parabolic trade. So I look for stuff like this to turn into one of the previous patterns. So just a quick review. We have 3 different types of parabolics. You have acceleration, deceleration, grind and stall, up and down. And then we have this concept of the front side versus the back side, which applies on both upwards and downwards moves. And this can be used to better time your entries and to lower your risk so that you have a defined place to put your stop loss. And then we have this concept of a stock spiking up or spiking down or gapping up or gapping down, which can potentially develop into one of the previous patterns that we talked about. So when I'm looking for trading opportunities, this is one of my favorite trading opportunities, is a parabolic move to the upside or a parabolic move to the downside, because they give you really quick profits and they're really, really reliable if you get good at timing them. So the key thing is to manage your risk properly and to not start in too big. So I think that's it, except for some of the major considerations. So what are some of the things that we want to consider when we're deciding whether or not to take on a parabolic trade? Number one is looking back at the daily chart history in this concept of measured moves. If you look at the chart on the right, you'll see, and of course this is doodled in Microsoft Paint, right? But this concept of measured moves, where you have the height of the initial move being A, and then a series of taps against that previous high along line B, then the potential upward move along line C. This is kind of how I determine whether a stock is currently parabolic, by looking at the daily chart or whatever time frame I'm looking at. I look back at previous moves and I want to see if it follows this measured move pattern where A should be equal to B, should be roughly equal to C, because that gives me a really good idea of like what kind of potential this stock has to go parabolic. And it kind of helps me to understand where I can start sizing into the trade and start actually expecting a reversal without getting my ass handed to me. Number two is the float. And this is something that I preach whenever I talk about things that I look for on potential short-term trades, is this float. And the float is the number of publicly available shares that can be traded by the average person. So it's a subset of shares outstanding. Usually it'll be pretty close to the total shares outstanding, but it is a subset of shares outstanding, and it's not shares that are owned by insiders or that are locked up by institutions or locked up because of an IPO or something like that, right? It's just shares that are able to be traded by the average Joe. And the float represents the supply, the total supply of stock. So when we talk about stocks, right, the core fundamental concept is supply and demand. High demand and low supply means high prices. That's economics 101. And vice versa, lots of supply and not very much demand means that the price will tend to decrease. So when I look at parabolic moves and when I'm looking at trading ideas, I'm looking for the exact same thing. The float, how much supply is there? And you can find that on something like finviz.com. It's really easy to find. And then the relative volume, meaning how much volume is this thing trading today versus its average? If the average volume is, say, 500,000 shares on a stock, but today it is 9:45 a.m. and the stock has already traded 10 million shares, that's a huge, huge difference versus the average. So that means that relatively speaking, right, relative to the average, there's a huge amount of demand. So considering that along with the float and how much supply there is relative to the volume, for example, if there's 10 million shares in the float, the stock has already traded 10 million shares at 9:45 a.m., you still have the entire trading day for it to just rotate through the same shares over and over and over again. And that means that the stock can continue going higher and higher and higher because it's just traders recycling the same shares at different prices. Number 3 is number 4, I guess, is how much emotion is there in the trade? And you can usually determine that based on short interest. So short interest is shares that are currently held short by traders that have open positions. And so if you have a large percentage of the stock that is currently held short and it gets really positive news, then you have a large percentage of the people that are holding a position in that stock, which are now losing money. And that obviously creates emotion. It creates panic as they try to get out of their losing trades. Number 5 is the news. What's the reason that the stock is moving? Is it real news or is it just fluff? So whenever I want to take on a parabolic move, I always want to understand what the news is that's actually causing the stock to move, because without understanding that, you're kind of shooting in the dark. You really need to know whether the move is justified or not. So daily chart, float, relative volume, short interest, the news. And then the last 2 are related to level 2 and speed requirements. Level 2, you don't really need if you're just getting started, but as you become a more advanced trader, level 2 data can really help you to predict where the top is or where the bottom is just by looking at the bids and offers that are in the market right now. And then the last one is speed requirements. You usually have to be quick for this. So you need fast software. You can't do this on something like Robinhood, right? Because it's just not fast enough. These moves tend to happen, at least on an intraday time frame, these moves tend to happen in like seconds. So if you hit the top perfectly on one of these trades, or you pick the bottom perfectly, within like a few seconds, you're going to be up on your trade, and it's possible that you can even get out of it, and start building up your profit cushion so that when it comes back down, you can add more, or when it goes back up, you can add more, depending on which type of trade you're doing. So you have to have fast software. You have to have a good internet connection. So this is just some of the things that I consider when looking at parabolic moves. So conclusions. Understand the goal. Know how to manage your risk. Average in safely, right? Keep in mind the idea of starting in small and adding more as the trade works for you. And that can be used not only on parabolic trades, but on all trades. So I always try to keep that in mind when you're working with parabolic trades and fast moving volatile stocks. You never want to throw all your eggs in one basket right off the bat. Start with 25% of what you ultimately want on that position, and then add the other 75% as it starts to work for you. Number 2, know the patterns, focus on your price action and the emotion in the trade. Understand what really is and is not a true parabolic chart, and we'll look at these in just a second. And then keep in mind that concept of the front side versus the back side. So if I could say one thing that is like the most important part of this concept, it would be to always, always, always have a plan. Never go into a parabolic trade, never go into a trade trying to time the bottom or time the top without having a plan to get out if you're wrong, because these things can go against you really quickly. And if you don't have a plan, it's really easy to end up with a huge loss really fast. And that is just it's really difficult to justify getting out of a trade when you're at a big loss really quickly, because you just, you think, okay, well, I was just off by a little bit, turned into a big loss. Let me just give it a couple more seconds. It could come back just as quickly. But then it keeps going and it keeps going and it keeps going. So it's just really easy for that to get out of hand quickly. So you should always have a plan before you even start trying this type of trade. And that's it. So lastly, there's a few links here at the bottom. Free reading and videos at my blog. Also, I've just put together this toolkit. There's a bunch of free tools in there, as well as some information on brokers and stuff like that if you're just getting started. So feel free to check that out. And also, if you have any questions, feel free to shoot me an email or just hit me up in the chat. So, all right, let's look at a couple of parabolic trades. So we looked at this one on SPY. This wasn't really like the most perfect parabolic downside move because it was kind of choppy along the way. But if we look at probably the most obvious, like recent one, was Tesla when it hit $1,000 a share. And if we look at this chart, so this is the type of pattern that I'm looking for when I see a parabolic move. And the crazy thing is, right, this stock, it looked parabolic way back here. But this just goes to show you how wrong you can be with these types of trades. All it takes is one big move upwards, and all of a sudden, now you're down from, you thought it was going to go in reverse at $440 a share, and now the thing is at 1,000. So the key pattern I think to look for is this acceleration to the upside, and then confirmed with the lower high right here. So I started shorting Tesla around 920, 930, 920 area with my stop loss just over 960. And that was a really, really low risk trade because, a stock that's $1,000 a share, you're risking like 30, 40, 50 bucks a share. But look at the potential downside. I mean, this one was beautiful, right? Because we also had the coronavirus helping us out. But this was a perfect example of a parabolic trade, even if you didn't hold it through that entire move, just by catching it like in the 920 to 940 range and putting your stop loss over the high of day at 965, you had potentially $200 a share the next day that you could have made on this trade. So, the potential for these is really, really quick profits and really, really big moves if you can get good at timing them. Another one which everyone is going to be familiar with is Bitcoin. Bitcoin has gone parabolic like 1,000,000 times. And you can see this pattern over and over and over again. Here's one on a shorter term time frame from 8,000 to 14,000. You can see that acceleration. And as soon as it gets to that blow off point where you have the big volume spike and that big kind of blow off candle at the very top, the next day from 13,500 down to 10,500, right? So you drop 3,000 points, which is wild. And that was actually a small move. If we go back in the history of Bitcoin, I mean, back when this thing was pushing $20,000, look at these moves and you can see the same pattern over and over again. This was a really, really crystal clear one here when it hit about 16,500 or so. we had this big move upwards, right, from 6,000 to 8,000, and then it started squeezing up to 10,000, and then over 12K, it got really, really crazy, and we had this big blow off, and then the next 2 days, we had a drop from 16,500 to 13,000, and then that was pretty much the top, right? So this is why you want to have a stop loss over the high of over the previous high, because if you were to catch this at, say, 16,000 and you're short selling it, right, and you're looking for that lower high, if you have your stop loss over 16,500, you have a relatively low risk up in this area, and you're not going to get sucked into a big loss as this trades up towards 19K and 20K. So you have to sort of have that confirmation in mind when you're doing this, but this is the kind of move that I am looking for when I look for parabolic trades. Look at this, from $1,000 to $20,000. This is a true parabolic move, and it went parabolic many times along the way also. Even, looking back towards 1,000 to 2,000, we see the exact same pattern. Acceleration to the upside, there's a little stall there, and then we get a big squeeze, and from 2,800 to 1,900 in 3 days. So these are the types of big moves that you'll see on parabolic trades. But the point is, the key thing, in my opinion, is remember, no matter how parabolic it looks, it can always keep going parabolic. And this, from 800 to 1,200, was another really good size move. Looked parabolic, looked like this is definitely the top, and we get that big flush from 1,150 down to 900 or so. I mean, it shed back 50% of that move, which is a huge move to the downside. But then, over the next couple of months, $1,200 looked like a really good buy point as this thing went from 1,200 to 3,000, and then 3,000 looked parabolic, but here we end up at 20,000 a few months later. So just remember, they can always keep going. All right, so that's it. Any questions, feel free to drop them into the /questions channel. I'm going to take a look at that right now. But that is my take on demystifying short-term tops and bottoms, some of the things to look for, and some of the ways to keep yourself safe. All right, let's look at questions. All right, so let's just put them in here. So if, Jay, what's going on? Just type your question into the live chat channel. We'll just answer it right on screen here. What's HTZ worth? 0. They just filed for bankruptcy. I really have no idea. Cash value, I suppose. One of the other things that I probably should mention, these parabolic stocks, parabolic moves tend to happen in garbage companies. So when you look at FinViz, and you look at the top gainers, you see these stocks like NavB up 91%, XSPA up 70%. These are the types of stocks that you'll see these big parabolic moves in, and the same pattern repeats itself over and over and over again. You'll see a big move to the upside, a big acceleration to the upside, and then the stocks tend to collapse. It's particularly prominent in biotech and crypto markets. So Bitcoin, Ethereum, Litecoin. Parabolic moves are rampant in these markets, especially in the crypto markets, because they're not regulated the same way or regulated at all. But it's also very prominent in biotech companies. And in particular, it's prominent in stocks that have very low float. So when you look at the shares float on FinViz, anything that's under like 50 million shares even 100 million is pretty low, but anything that's under like 50 million shares will tend to have big parabolic moves, especially if they trade a lot of volume. Where'd Discord go? Yes, the market is closed tomorrow. How to identify which stocks to trade for some gain potentials. We just spent 45 minutes talking about that, Jay. So one of the other ways that I look for potential trades is using FinViz. I often go through the top gainers and the top losers, and I'll go to the charts tab, and then I set it on candlestick, and I'm going and looking for stocks that either could potentially reverse. So this CLSN, by the way, this is a beautiful example of a stock that's parabolic right now. You see this acceleration, small candle, and then you get a bigger candle and a bigger one and a bigger one. It would not surprise me to see this stock blow off to $3.50 or $4 a share and then collapse all the way back down to $2 over the next few days. Of course, you have to watch these day by day, because if it closes at $4 and it closes on highs on Tuesday, then, there's a potential it could keep going. It could go to 5 or 10. So that's why you want to size in slow and small at first in case you're wrong. You just take the small loss and you move on. But this is one of the ways that I look for potential trades, not just for short selling, but also for breakouts. Like DFFN here had a pretty nice break off of the $1 level on Friday. And it's popped up from $1 to $1.24. So now, as long as it holds that same area, like $1.20, $1.15 area, then you've got a relatively low risk entry. With a small enough position, you could even risk down to under $1 because that's where the real support is. But you just have to keep in mind what your reward potential is like. If you're going to go for a 50 or 100% gain on it, then it's okay to risk 25% or 30% for it to fall back under $1. But if you're only going to go for a 5% gain, it doesn't make any sense to risk all the way back down to, 1. So that's another one. Maxer here had a nice push off of $10 on Friday, and it's coming into this $12 area resistance. So if it takes that out, it could see a continuation move up to like 14 or 16. BXC, this is one of my favorite patterns, actually. You have a stock that's been just completely demolished. This is building products and equipment. I don't know how volatile this is going to be, but this pattern of a stock that drops from $20 to $4 and then it starts bouncing and putting in higher lows. See how we had this little dip under $4 back in April, and then in the end of April we had another bounce off of $4, and now it's put in another higher low above $4, so you have this sort of uptrending channel here, or uptrending support line, which is a good indication that the bottom is being put in. And now you've also got a $6 resistance level, which it's just now pushing up against and starting to accelerate in terms of the volume. So if it gets above $6 and it starts to heat up, this could easily run back to 8 to 10. And that's a really good move on a $6 stock, right? This thing could almost double in a relatively short period of time. So that's one of my other really favorite patterns, is this sort of bottom bouncing play that's coming into previous resistance. Hopefully that answers your question, Jay. American Renaissance, what stock are you talking about? I'm not sure what you're I'm not sure what you're referring to there. Let's go back to the live chat channel. Okay, so All right, so Jay, we talked about how to identify highs and lows during the day sessions. You want to look for those lower highs and lower lows. Random John, you were asking, do I have a scanner for this? I do, actually. I use a tool called Stock Fetcher. And this thing is super cheap. It's like $25 a quarter. So it's good if you're an active trader. I've got one that looks for 7 days up. And then I also have another one. Most of these are not really good parabolics. This RPay is kind of the grind and stall look right now, but it's really only gone from 1750 to 24 or so. So it's not really a huge move. Usually with a parabolic, you want to see a bigger move, like 50 or 100%, before you start trying to time the bottom of it or time the top. But I've got that. I've got another one here, strong momentum up, which sometimes finds parabolics. See, like Zine here is not a terrible looking parabolic move. So yeah, I use Stock Fetcher. You can custom write your own scans for it and tell it specifically what to look for. Show stocks where the volume gained 100% in the last 2 days. Prices between 1 and 90. And then you can create variables like, so this top tail ratio is the size of the wick on top divided by the size of the entire candle. So you can create like custom variables and stuff if you're a Cody person or a techno geek like me. This is a really cool tool, and I use it all the time for finding good trading ideas. What else we got? Best resources to learn the options and short all as a beginner. So one of my favorite tools for learning options is Option Alpha. That's what I started with. Like, I don't have a ton of experience with options, maybe like 3 years or so. But optionalpha.com they've got a ton of, like, see, there's 20 video lessons that are free, and then you have 26 video lessons on entries and exits, options expiration. All this stuff is free. I've not gone through all of this, but they have added a boatload of free content since I last looked at this. But I went through like a couple of the courses in one weekend, and I spent like the whole weekend doing it, and it was totally worth it. It taught me basically the ropes of how to get started with it. And once I got done, I literally opened an options account like the next day. So Option Alpha is great. Okay, what else? Yeah, and short selling is a little bit different. The big thing with short selling is you have to have a broker that has shares to borrow. And the more retail-y brokers like TD Ameritrade, E-Trade is pretty good, but TD Ameritrade's short list usually sucks. And then, so if you want to short sell heavily, it makes sense to have a different broker like Speed Trader or Centerpoint Securities are two of the ones that I've used in the past. And both of them are really good. They have excellent short selling lists. What are the current battleground stocks? Wudo Smash, define battleground stock. What's a battleground stock? You have to remember, I'm a self-taught trader. I don't know all this fancy financial terminology, RTX and TDG. Oh yeah, good call. American Renaissance YouTube also. Tesla's a battleground. Let's see here. Anything else besides looking at the charts of top winners and losers? What are some of the screeners you select on FinViz? Bull King, good question. So I really like, let's get rid of some of these tabs here. So on FinViz, for short-term trading, I really like high short interest. So more than 20% float short. What that basically means is that there's more than 20% of the publicly available shares held short, and that tends to cause big upward moves when the stock gets positive news. So I really like that one. I also like combining that with high relative volume, like more than 3 times average volume, for example, or more than 2 if there's not enough ideas. But yeah, so float short, relative volume, current volume I don't really care that much about. The sector is obviously, or the sector in the industry can be good screens. Industry, particularly biotechnology. There's 536 items in here. So one of the things I would do to sort of knock this down is I don't really care about stocks that don't trade that much volume. So I would probably want average volume of, say, for biotech, probably over 500,000 shares. You could go up to 1 million if it's still a lot, and it is still 235 results. So I would go up to over 1 million shares average daily volume. And then from there, I could knock it down to, say, all the ones that are high short interest. And now we have just 13. And go to charts, candlestick, and now I can start looking for potential opportunities. So Allo here, this is an interesting one because we have over 1 million shares average daily volume. So it's got decent volume. It's on a big run from 20 to 54 just since April. It's got high short interest. What is its short interest? 25% held short, only 53.94 million shares in the float. So it's low float, high short interest. It's squeezing to the upside. And it most likely looks like it got some positive news here back in mid-May. That's probably what caused the gap in this big spike in volume. But this is a perfect example of, a stock that gapped up and people probably thought this thing's a pile of junk. It's got to go back down. They start short selling it and they end up getting trapped. And now what you're seeing is this move to the upside is all of the people that short sold it too soon and are now losing money. They have to panic to get out of it. Yeah, so there's some of them. Whoops, that's not what I wanted. Do I follow the strategy for all stocks or just penny stocks? Well, so you can do this on all stocks, but it tends to work better on the more volatile stocks. So things that are cheap, things that are low float, things that are high short interest. And those will typically be your junker biotech companies and small cap oil, things that nobody cares about or knows about, right? I'm not gonna follow this strategy on something like Apple or Microsoft because you're just gonna end up fighting the algorithms, and you want to be battling other retail investors. You don't want to be fighting algorithms. All right. What do I think of HTGM or TTNP? We'll take a look at those in a minute. Let me look in the questions channel just in case there's anything in there. Compared to other strategies, this is a really good question, Stuart. Compared to other strategies, would you rate parabolics as a safer strategy or more on the riskier types of trading strategies? Trading parabolics is by far the most risky strategy that you can take for trading stocks. If you want to try to trade, if you're looking for something more risky than trading parabolics, the only thing that's really more risky, in my opinion, would be either A, trading parabolics on cryptocurrencies because they're unregulated and they're just crazy, or B, trading parabolics on options, trying to trade options on a parabolic stock. That can get real wild because your leverage is 100 times normal. Do I find day trading still profitable? Yes. Day trading is definitely profitable. You just have to be good at it. All right. Yeah, hodl that Bitcoin. That's right. HTGM and TTNP just popped in. Options trading is the same as day trading. No. options trading is definitely not the same as day trading, Jay. If you're new, you should spend a little bit of time in the market toolkit that I created. There's a ton of like just beginner stuff in there. So there was a link to it. I'll put it in the chat also. /market toolkit. So I put this up on GitHub so that people could submit pull requests to it if they wanted and stuff like that. But so there's an entire getting started section. And then there's this general stock market research section, which is also really useful. So how to start investing in stocks, investing for beginners, understanding interest rates. There's a bunch of stuff in our stocks wiki. I also really like not that one. The Khan Academy. I really like this Khan Academy Stocks and Bonds course. And there's a couple of different ones from the Khan Academy, which are free and really, really good. So they talk about things like what it means to buy a company stock and short selling, some of the financial stuff like capital structure and profits and so on and so forth. These are metrics like return on assets, PE, EBITDA. So yeah, these are really good. If you're new, I would highly recommend that you spend some time digging through the resources in this getting started section and also in the general stock market research section, because there's a bunch of stuff in here that can be really useful. So King Zombie's asking, with Allo, would you buy stock then because the shorts are panicking to get covered? Yeah, so when I look at stuff like Allo, this is a good example of something that to me is not really parabolic yet because it doesn't have that acceleration look. If you remember, this is the kind of thing that I'm looking for. This is what we saw on Bitcoin and this is what we saw on Tesla, where you have this big blow off. It's almost like if you look at it before Friday, it had started to do the sort of deceleration move where the candles were getting smaller and smaller and it kind of looked like it was going to stall under 50. And there's probably a lot of people who started short selling it there looking for this kind of a pattern and putting their stop loss over $50 a share. But then on Friday, it popped up through $50 a share. It's up 7.65%. So all those people who didn't get out and didn't obey their stop losses, now they're trapped in it. So this could definitely continue higher. But there is definitely a limit for where I start to become, a bit impatient on it. At this point, anything that I bought on Allo, I would not be holding it for very long. This would be primarily for day trades. I don't even think I would hold this overnight at this point because you never know when stock, runs up to $60 a share or something, and then they do a secondary offering and drop it to 45 overnight. It's risky when you're up this high. So at this point, I would pretty much only trade it for day trades, but it's still, it has a lot of potential. The data on FinViz, Jay, is delayed by 15 minutes unless you pay for it, but that doesn't really matter to me because I'm only really using it for screening for ideas. I don't use FinViz intraday to look for ideas. I use it at the end of the night. When I'm looking for ideas for the next day, I'll use it on the weekends and at the end of each day so that I can see what the top gainers and top losers were that day, look at the ones with unusual volume and so on and so forth, some of these other screens. But I don't use it during the day. Yeah. Tips for the beginner, day trader, and short traders for resources for live data and minimal fees or free. The best thing I could say is probably Thinkorswim from TD Ameritrade. They're one of the only companies that still gives you free level 2 data. And it's not perfect. It's not super fast, but it's good enough to at least dabble. I would say if you're a beginner day trader, don't play around with parabolics too much until you have more experience. It really took me like several years before I was comfortable doing it. And even with all that experience, there's parabolic trades have been some of my biggest losses in my entire trading career. So when they go bad, they go really bad. So just keep that in mind. All right. Thoughts on allocating more percent portfolio to international funds during this coronavirus time? Honestly, I don't really think that it makes any difference because this is a global crisis. So I guess that's up to you. I don't really think that there's any need to change your, domestic versus international allocation. But, I definitely, if you're looking to get out of the market within a shorter time frame, you might want to, depending on your age and stuff, right? You might want to allocate differently between stocks and bonds and like high risk versus low risk stuff. But I mean, I'm young, so I still have pretty much everything invested, almost all in domestic stock right now. Ghosty, ideas for long-term investments. Yeah, so flights and oil, I mean, that's the quintessential everything is down right now, just buy airlines and buy oil and you're guaranteed to make money. But that's not really the case in my opinion. Long-term, right now, I really think that tech is where it's at. As crazy as it sounds, tech has already been in a huge bubble for like the last 5 years. But what's going to happen when the economy shuts down again, if we have a second wave? These companies like Zoom and the higher, like the more things that support like remote working and stuff like that, that's what's really going to benefit from a more remote world caused by something like the coronavirus. So airlines, it's hard to say because on one hand you have the government bailing people out, bailing companies out. And on the other hand, they're so debt ridden that it's almost guaranteed that some of them are going to go bankrupt. Yeah, Roy, the stream will be uploaded. Jay, setting a stop loss is a very basic thing that you absolutely have to know how to do before you ever make any trade. So I would recommend that if you haven't learned how to do that, you do before you do any more trading. It's just an order that you put in your broker. Do I use insider trading to buy and sell it all? Yeah, sometimes. So let's see. I think there's a thing on FinViz that shows like recent. Yeah, here it is. Latest insider trading. I want to say that there's like a whole. Here it is. So it's under insider on FinViz. All of these. I will occasionally use these just to look for ideas, but typically I'm a more technical trader, and insider trades are usually for longer term moves. But there are definitely some good ideas in here. The other thing I use, shameless plug, is this events page from my own site. Every night at 9 p.m., it updates with all of the latest 13G, 13D filings, any kind of bankruptcies, earnings reports, current reports like 8K, 10Q, 10K, all of the SEC filings. It'll update every night at 9 p.m. So this is completely free. You can just go to it and check them each night. And any one of them that you see the ticker and you might be interested in it, just click on view and it pops right up to the SEC filing. And then you can read it. So I use this a lot, just scanning through at night, looking for companies that might be companies that I know, like that I've traded in the past that have released a certain kind of news. All right. Cannabis. Yes, I agree. Once it's federally lifted, which who knows how long that'll take. But yes, I agree. Yeah, Microsoft, Apple, the newer technologies, right? VR, AI, that kind of stuff is all going to, it's much less impacted than manufacturing and airlines and oil and cruise ships. Those are, the risky ones, but I'd rather allocate my money elsewhere. Okay. Well, listen, guys, thanks for coming tonight. I will upload this stream as soon as it's done processing. So it'll go into the archived streams channel, just like all these other ones here. And keep an eye out for the next few chats. We're going to be doing one next week on scanning. So we can go into a lot more detail about what I look for on FinViz. And then the week after that, we'll do something about SEC filings. And then we'll also, at some point within that time frame, we'll pick the 3 next streams that we'll talk about. So thanks for coming. And if you have any other questions, feel free to hang out in the live chat afterwards and talk amongst yourselves. I'm going to go and relax for a while. But thanks again for coming, and we'll see you next time. Peace.